We're looking at a screen that's, well, really flat as far as the Sensex and the Nifty are concerned. We have a little bit of pain in the Nifty Bank and a little bit of equal amount of green in the mid-cap index. So evenly placed for bulls and bears at this point in time. So let's concentrate on the larger issues. Power sector on our radar, and joining us now is Prashant Jain, Joint MD and CEO of JSW Energy. Good morning, Prashant. Thank you very much for joining us. First up, greetings of the season from everyone in everyone in CNBC-TV18. I wanted to ask you, what is your participation in the distressed asset sector? We just spoke with the State Bank of India MD, and she said four or five plants look like will get sold off. You didn't get Prayagraj. Would you throw in your hat for the others?
Yeah, good morning, and first of all, very happy New Year to you and all your viewers.
Thank you.
Power sector, so far some of the assets lenders were planning to, resolve outside the NCLT process, but we saw only two assets got resolved. One was Prayagraj, another was SKS. And another assets, I think we are seeing a lot of, we are not getting a, clear signal whether there is a consensus among the lenders' expectation and then what bidders are talking about. And, somehow, I feel that there is a clear resolution which will take place in NCLT. And so far, we have not seen any assets entering into NCLT other than two assets, which is Monet Power and then Ind Bharat. And I think if the assets go to NCLT, there will be a quicker resolution and a better resolution plan will be achieved. As regards to our interest, as I maintained earlier also that, we are a growth-oriented company, and given the size of our balance sheet and financial gearing, we remain interested in some of the important assets, whether in NCLT or outside NCLT.
Okay. What would those assets be? I mean, there are a lot of reports suggesting that you're out of the race for Monet Power, some other assets also being talked about. I mean, can you confirm or deny this?
I would not like to pinpoint a particular asset, but we are interested both in renewable as well as in thermal space inorganically, and we feel there are some good interesting assets. Each asset is having its own complexity. Some assets are having some part PPA or no PPA, or some assets are having a capital structure problem, or some assets are having no fuel linkage or part fuel linkage. And each asset will be having its own unique resolution plan. And but we are having only two criteria when we are looking at these assets. One is that it should be a low-cost power, because that's the only way where you can, be in the merit order dispatch when the power is scheduled by the DISCOMs or the SLDCs. And second thing should be that it should be a value accretive for our shareholders or all the stakeholders. So that these are the two criteria, and with that we feel that out of so many stressed assets, there will be some assets which will be falling in this criteria, and then we will be working on them.
Okay, yeah. I mean, Ms. Kant told us, that's the SBI MD told us that they're all going at 40 to 50% haircuts. That should be accretive, isn't it?
It needs to be looked in the context, Lata. If you see that if on the original debt amount, probably there is hardly any haircut to the lenders. But if you are talking about interest and penalties, and then based on that you are totally with the accrued interest and penalty, you are looking at the debt which has been evergreening was done for last 4 or 5 years, then there is a haircut, otherwise probably there is no haircut. If you look at some of the assets which have gone for 3 crore rupees per megawatt, that was the typical amount which was a debt amount, and one time, so it's a 4 crore rupees megawatt is the asset, 1 crore was equity and 3 crore was debt, and then lenders realized 3 crore equity is washed out. So it's only the accrued interest or, the
penalty that's wiped
penalty
out.
Or some Yeah, that.
No, I take your point. I take your point. And of course, as Ms. Kant was telling us, lenders' agreement has been a problem. Prashant, let us come to now the demand situation itself. It looks better than it has looked for many, many years now. In fact, Credit Suisse has actually started calling a buy on even BHEL on the assumption that, there will be greenfield projects. How are you looking at both PLF and at merchant power rates, say, in the next 6 months?
So first I will address the PLF issue or the demand issue. Like for the first 9 months of the current financial year, the demand growth was 6.2%. In the Q3, the demand was very robust. It was 6.8%. In the month of October, it was 11.5%. And the trend is picking up. And we did a very interesting exercise, which we saw that in last 3 years, base demand has grown up by 16%, point to point. Whereas the normative PLF adjusted basis, the capacity addition was only 11%. So what that is doing is that the demand and supply mismatch or the oversupply situation is contracting. And that is what is reflecting in higher merchant prices as well as higher PLFs. So PLFs are on increasing trend, and same is the merchant tariff. So if you look at 2016-17, 2 rupees 42 paisa was the average merchant tariff, which was 3 rupees 26 paisa in 17-18, and this year it is 4 rupees 8 paisa. So I believe that because of no new capacity addition and shortage of domestic coal, the merchant tariffs will be going up, and that's what is the good advantage for imported fuel-based power plants like us. If you see in Q2 this financial year, total coal imports went up by 44%. In Q3, it was 18% up. That is what is reflecting that the more coal is getting imported. So that's what is on the demand side. And for the capital expenditure side, right now, if our base demand is approximately 148 gigawatt and peak demand is 177 gigawatt. And if the demand is growing at 6.2 or 6.5%, that means you are talking about net demand addition of 10,000 megawatt. If you gross it up with the auxiliary power consumption as well as the PLF of 85%, you're talking about 15 to 16,000 additional capacity requirement every year. So in 2 years time frame, you will see this all the assets will get good PLF, which is 63-64% PLF will be going to 74-75%. And post that, you will surely see new capex starts happening. Okay. Another thing is in the case of renewable. Okay.
No, go ahead.
In case of renewable also, we were having a very aggressive targets. Like in the current financial year, there was a target of 22 gigawatt. As against that, till December only in solar, 4.5 gigawatt capacity addition took place. So on renewable side, the capacity addition is also not taking place. So this is further aggravating the situation, and then you will see the sooner or later the capex cycle will revive.
Okay. Actually, I just had one follow-up question to what you said earlier. You did mention that, you're interested in acquiring both renewable and thermal assets. What is the quantum of cash that you've sort of earmarked for this, for these acquisitions? I mean, what are you looking at? Because you do have a debt of almost 10,500 crores as well.
Yeah, Sonia, you need to look at in terms of the context, our debt to equity is less than 1:1. And, for a project SPV basis, the debt to equity should be approximately 2.5 or times is to 1 to give a good return on equity. So we have a lot of headroom for our balance sheet to grow in both the spaces. And as well as, excuse me, we are a free cash flow company. So, but we have not earmarked any specific war chest for these acquisitions. But case-to-case basis, we will be looking at it, and we feel that we have enough appetite.
Pleasure speaking with you, Prashant. Thank you very much for joining us, and have a great 2019.